what's up guys? John here. I'm going to walk you through a situation that I think is going to unfold nationwide. I think it's going to have a really big impact on the residential real estate market, the commercial real estate market, office. I think we're going to see a huge change in the way in which people live and how they live and where they live and affordability. All of this is going to be fueled by what's happening right now with this commercial real estate problem. Now, a lot of people talking about this commercial real estate crash and Warren Buffett, Charlie Munger, Elon Musk, basically every head of every bank nationwide is talking about commercial real estate. But it goes much deeper than commercial real estate. It's going to be the net result of what's happening to commercial real estate, and which is going to fuel everything else. And in this video, I'm going to walk you through exactly what's going on. It's pretty shocking, and how this is all going to play out. Please hit the like button. When you hit the like button, YouTube's going to share this content to educate more people about what's happening in real estate and in the economy. And if you want to invest in real estate, or maybe you have credit card debt and you want to transfer that debt to a 0% interest credit card, we'd love to help fix your credit so you can get approved for something like that at greatcreditfast.com. That's greatcreditfast.com. You can give us a call at 561-430-5900. Take a look at this. So more than half of the $2.9 trillion in commercial real estate mortgages will need to be renegotiated in about 3 years, right? 2.5 years. So about $1.5 trillion. Now, what a lot of people don't realize about commercial real estate, it's not like residential. So residential, you'll sign on the dotted line, maybe you put 3.5% down or 5% or 10 or 25%, whatever you want to put down, whatever you get approved for. But you are basically guaranteeing the loan. You're guaranteeing, saying, look, I have a job, I'm going to be able to afford this, I'm going to make the payments. And so you risk your credit score if you default, right? You risk it. You're personally guaranteeing the loan. But with commercial real estate, it's not like that at all. The commercial real estate investor will put down 30% in most cases, 25 to 40%, depending on the income of the building. And then the bank will bring up the rest of the money, and they're going to lend the money based on the cash flow of the asset. But when you have a situation like what's happened over the last couple of years, where office vacancy went from 5% to, in some cases now, 40, 50, 75% vacant, and then you have interest rates skyrocketing about 450 basis points, and then you have insurance and property taxes going up and rents falling because of all the new supply, it's really a problem for a lot of these landlords and a lot of these small regional banks, because roughly 70% of all of these loans are held by small regional banks. And these small regional banks, as you know, the last 90 days have not had a good first and second quarter. They're walking into big problems. And so you have to ask yourself, what are they going to do with these loans? And what's going to happen? How is this going to impact all of us? Well, look at this deal here. This is San Fran, 350 California Street. This deal was valued at $300 million just a few years ago. Now they're getting bids at 80% off, so around $60 million. They're getting a bid for $60 million bucks. So on a building like that, 300 square feet, you couldn't build that for $60 million bucks. And so it's an incredible opportunity for people to run out there and acquire them. But the big question is, what do they do with it? If they're not able to command the same rents and they have record high vacancies, what do you do, and how does this whole thing play out? Well, with that building at 75% vacant, what they're going to start to do here is they're going to start to look for a better use, the highest and best use of the property. And the big question is, what is the highest and best use, and how is this all going to play out? Well, what I think they're going to do with that 300 square foot property, 300,000 square foot property, is that if each unit, if they were to do conversions, and each unit was 500 square feet, that'd be 600 units. But of course, there's common areas and walkways and public spaces. Let's say, for example, it was only 400 units. And so the other space for the other 200 units was just that public common area. That would still bring in at $3,000 a month per unit, which in San Francisco is pretty cheap. That would bring in $1.2 million per month. $1.2 million per month. And per year would be $14.4 million if it was fully rented, the entire building was fully rented. Now, of course, you'd have some vacancies, some evictions, you'd have some problems, but ballpark, it'd probably be somewhere between 13 and 14 million bucks in overall gross annual income, which is incredible. So on that type of deal, if they were to buy it for 60 million and they were to invest $30 million in overall renovations to complete this conversion, they'd be all in for 90 million. They would probably put $20 million down, the bank would put up $40 million, and then they'd have to come up with another $30 million for the renovations, right? So they need about $50 million bucks. But on that valuation of $90 million, they would get a 14.4% return, which is absolutely incredible, because the average single-family, multifamily deal is probably returning somewhere around 5%. So you basically get 3x the return to do these conversions, 3x the return. And when you start to look at how this all plays out and where this is actually happening, a lot of cities are talking about affordable housing. I'm sure if you live in a city, you're probably hearing about it all the time. Philadelphia, Boston, LA, San Francisco, Atlanta, Chicago, every city's talking about affordable housing, and affordability is a very, very big problem. And so when you look at these cities that are already implementing these policies for these conversions, you have Chicago, you have Cleveland, Dallas, LA, New York City, Philadelphia, Toronto, Washington, D.C., and many other places, even Brussels, Barcelona. A lot of places are offering this conversion. And so when you see how this plays out with, like CoStar saying 1 in 3 office buildings in major North American cities could be ripe for multifamily conversion. Now, a lot of people think that it would just be commercial real estate that would do this conversion. We have to also take a look at what's going on in multifamily real estate, not just office, multifamily commercial property. These properties are in very, very big trouble as well, because many of these properties will have to be refinanced also. And so they won't be able to get the refi if they have a situation in which their rents are not climbing. In fact, many areas they're starting to soften or even decline. And so if their rents are starting to kind of soften or decline, and the cost to borrow money is skyrocketing, and the cost for insurance and property taxes going up, it's a problem for these property owners. And so what I think is going to happen is we're going to see tons of commercial property trade hands, especially office, into developers and investors that are going to repurpose these properties. We're going to see a lot of people also trade into a lot of these multifamily properties that they're not able to hold on to because of these high interest rates. And then we're also going to see a very, very big shift into people becoming landlords that had no intention of becoming a landlord. And here's why. Well, when you look in 2020 to 2022, 40% of all mortgages in America were taken out in just those 2 years, right? And the average down payment for a first-time home buyer was 6%. So you think about it, the cost to sell a property, agent fees probably 5%, closing cost, escrow, any type of transfer taxes might be a 7%, 8%. So just from buying to trying to sell the property the same day, they wouldn't be able to do it and get their money out, their down payment. They'd be operating at a loss. Well, what happens when interest rates doubled over the last 18 months, right? Of course, they probably lost more. They're not getting their money back from what they purchased 2 years ago at. And so you look at second homes, people buying second homes, their average down payment was 13%. So there's really not much room. If they have 5% of actual wiggle room from the cost of sale, and I mean, you look at markets, look at a lot of markets, they're softening. Residential real estate markets are softening. And so what's ultimately going to happen, I think people are just going to start renting out their homes. So you look at what's going on. You have a lot of people that are going to start renting out their homes that had no intention of doing that. 1.7 million new apartments are going to be coming on the market for rent due to builders. You've heard that conversation about there's a housing shortage. Then you have this that's happening. There's a huge shift that's going to be happening in the housing market. And so what I believe is going to be the key is having tons of cash, having great credit, having a really good game plan. If you're going to invest in real estate, make sure you're buying incredible value add deals and you're getting them for a substantial discount. And you're positioning yourself, because I believe what we're going to start to see is a lot of people, they're not going to be able to hold on. They're just not. And especially when you start to look at all this new supply, if rents start to come down because of this new supply, how do these landlords hold on, right? If they're buying a deal at a 4% return or 5% return, and then in their market, they have one building that just converts, brings 600 units to market. Another one comes on, brings 200 units. Another one brings 100 units. They're all competing over the same tenant. And so how do they compete? Amenities and price. That's it, amenities and price. And so if you have an old, 20-unit building with very little amenities for $2,500 to $3,000 a month, and then this new building comes on for $2,200 or $2,000, the only way you're going to be able to win that game is to reduce your rents. That's it, reduce your rents. That's what I think is going to happen. It's going to be a race to the bottom, and people that acquired properties with very small margins are going to have a harder time holding on over the next 5 to 10 years. Now, office conversions, this isn't going to be something I believe that's going to happen in a year. And one of these conversions alone will probably take 12 to 18 months, maybe longer. But if you start to see huge opportunities, you're going to see companies like Blackstone and a lot of these big players step in, and they're going to start turning these properties fast. So I think over the next few years, you're going to start to see a lot of big cities come forward with a lot new inventory. What do you think about this entire situation? Do you think that this is going to be a very, very big change? I do. I think there's going to be a massive opportunity, and this is the best time to have a great online business, to start to really pay close attention because this great wealth transfer. And my old saying is money is never lost, it's simply transferred. It's transferred to the patient, transferred to the one that's well prepared, transferred to the one that has the best game plan. So if you need help fixing your credit, we'd love to help you at greatcreditfast.com. But drop your comments below. Let me know your thoughts about this entire situation. There has to be, I can't think of another way in which these office buildings are better served. They're going to be converted. They're not just going to sit vacant. These cities want the tax revenue. So if they can issue these conversions, they can put everyone in these cities, offer these tax breaks to builders to build and convert these properties, and then generate the tax revenue off of every penny earned in these buildings. It's a win-win for the city. The city wins big time doing this. There's no, this isn't 5 years ago, 7 years ago, people would be like, okay, we don't want the density. It's too packed. There's not going to be enough parking. They're going to get rid of all that. They're going to say, we're going to put everyone here. This is the best way for us to really monetize this location. What do you think about it? Drop below, hit the like button, subscribe on IG for short form content, and catch you guys next video.